Carlos, when you're talking to these large fund managers, Hamilton Lane alone has more than $800 billion under supervision. How quickly are they starting to look at blockchain as a way to expand their investor base and bring more people into their funds?
Hi, Sonali. Thanks for having me. I think it's been a journey for these asset managers. We started talking to them, back in 2018, to some of them like KKR. And, they've been basically building out the internal capabilities and the knowledge. And at the same time, the industry has evolved as well in terms of, making blockchain easier to use, in terms of wallets, performance of the underlying blockchains, et cetera. And also, more importantly, the regulatory clarity of what does it mean to actually tokenize a fund on the blockchain and who can manage those securities and who has licenses to do that, et cetera. So it's been kind of a journey, but I think at this point in time, and I think that the fact that KKR and Hamilton Lane, which are two massive private equity firms, have decided to do that, I think it signals an inflection point in the industry where we're going to start seeing massive adoption going forward.
So let's take KKR as an example, because an everyday person can't really say, hey, let me put $10,000 into a KKR fund. But now they're making a private equity fund available through tokenization. What does that mean? How is it different from a traditional private equity fund? Is there a key separation between that and the normal fund that you would invest in as a large institution?
Well, so asset managers, as you said, I think they've recognized that they've been extremely successful building AUM, primarily going after institutional investors and ultra high net worth individuals, and that they are, there is a new breed of investors that are individual investors. They are much younger, they're digital, etc., that they don't have access to those products at all because of the structure of the products is designed for institutions, etc. So they all recognize that they have to figure out how to reach out to them. And I think they see, blockchain and tokenization as the most, if you want, modern and advanced way of providing this, fractional ownership in a very efficient way, being able to track the beneficial ownership of the securities, provide, compliance, asset servicing, etc. So that conversation usually is very easy, and I think what boils down later is about how do we do it, etc. The fund itself is very similar. It's slightly different in the sense that this is a feeder that has a slightly different structure, which we're trying to make it actually more individual investor friendly. So, but overall, you should expect that the performance of the tokenized version, very closely tracks the performance of the original private equity fund that was only available for institutions.
Now, how much of this was even possible even 5 or 6 or 7 years ago? How much was this made possible because SEC rules have made it more possible for accredited investors to invest in a wider array of funds?
Well, the SEC rules to allow for more accessibility to accredited investors haven't really changed significantly. They did some improvements 2 years ago in terms of who qualifies as an accredited investor. I think what also has happened is that more and more people are accredited investors, right? Because the wealth is growing in the United States, and today there's around 13.6 million people that qualify as accredited investors. That's more than 10% of the households that collectively manage $75 trillion. I think the issue was that the products that those asset management companies had, they were not accessible to these investors because they're not being served by the current, whether wealth management or registered investor advisors. So I think that's what
it begs the question, when you're looking at the opportunity to invest in a broader array of alternatives, do you think that crypto, blockchain technology in particular, can be used for more of these types of purposes more than they will be used in the longer term future for actual tokens?
Actually, if you look at the size of the space that we're looking at, we're talking about trillions and trillions of dollars of real world assets and funds and credit and real estate, etc., that can be tokenized and put into the blockchain. So that dwarfs anything else that you've seen in more like native digital assets, if you want, like Bitcoin or Ethereum. So I think that the potential of this becoming the biggest thing in crypto is definitely there.